Testing 1 2 3. Testing 1 2 3.
I can hear you, Phil. I just put my phone on mute. Okay. You want to get rolling?
I need to let me kill my one of my windows here. Okay, I'm good to go. You're good to go.
Okay. Yeah, 1 second here. Sorry. Hey, Kat. Yeah, we're starting right now. Okay. I mean, we're already live. So, anyway, that's how we start our webinars, with dogs barking. So, the chief executive officer just showed up. So, all right. Hey, so let me, Phil, I'll try to grab. How do I grab the screen here in Zoom, I guess. Let's see here. Share. Okay, I'm going to share the screen. And then I'm going to go to here and go to here. Let me know when you see my screen, Phil.
Not yet, Bob.
Okay, let me make sure I did the screen. They're gonna have to come with you. Let's see here. Oh, I didn't share it. Sorry about that. Okay.
Okay.
You guys see it now? Okay. So let me start with, yeah, here we go. So can you guys hear me okay? Somebody could just speak up in chat and let me know when you can hear me. Volume is low. Okay. Can you hear me better now? Okay. Sounds like it's a Chris issue. Okay. Let's get rolling here. So I'm gonna first talk ES, and then I'm gonna get into some of the charts, and I'm gonna talk gold too, because that's kind of where our money's gonna be made. But I wanted to talk ES here. So we had a failure yesterday at a high, and it sure looked like it was going to come down pretty hard, and it actually broke through mid-level support here on the 4-hour, and we had a sell signal here, but the longer-term Stokes were still embedded, and as it was failing, they actually ripped it, and then actually took it to new highs. And now what we have to do, we have to now respect that move. And now we have to look for the failure in these stochastics here on a 4-hour, and have this longer term stochastic come back down here below the 50 line. So it's pretty much unbelievable pie to most people in the world right now, how they're just simply able to just continue levitating the market. They did this move with $4 billion of buy orders. They control $200 billion of movement in the value of the stock market in the United States, with $4 billion in buy orders, which is absolutely incredible. So that's like 1/3 of what they normally do. So we have to see if they're going to blow it off. Phil keeps talking about 2880 as the gap fill for SPX, which is just 20 points from here. And then we'll have to see if 2900 comes into play. And then we're going to be double topping the market from last year. And then we're just going to have to wait and see what happens from that. So, but that's ES. Most people don't trade that. We kind of mess around with it a little bit on futures and binaries. But what I'm more excited about is what's happening in gold. And I drew this line, a couple weeks ago, and we had this bottom here to see if they're going to try to bring it down. And because they keep trying to sell it off, and every time they got it below 1300, they were able to push the price down. And once they pushed the price down, it kept getting bought back. It kept getting bought back at higher and higher lows. And then I drew this line here as a potential for a cup and a handle. And now we broke through that yesterday, and now we're coming back in. And as long as this trend line reasonably holds and we come back up through this 1312, 1315 area, we're looking for another $30 move in gold. And as you can see, every time gold starts to move and try to make higher high, the miners are really starting to take off. And we've just had an incredible run, with the miners. And I don't see that abating. And I'm going to show you oil real quick too, because we've had a lot of success trading oil as well, is that we had this bottom that blew out the bottom of the channel here on the 8th of March, when everybody thought oil was going to go down. And they used oil basically as a funding mechanism for the market. And just like they use volatility, and just like they use the yen, they use oil because then they can collateralize the oil to buy shares of stock. And that broke over $60 again. And now they're trying to hold it. And what we're told is that we're looking to get to 75 by summer. I just don't think it's going to happen. But this is a big shelf right here. And I think it's going to come back down. And we have Russia trying to restrict oil purchases, but a lot of the OPEC countries want to produce more. So I think we're going to get in a battle here again pretty soon. But right now, oil's the same way. Look, see, the long-term Stokes are saying, don't short me. And the short-term momentum is saying, hey, we probably have a short-term top here. And we're just seeing a lot of patterns this way right now. And all of it's because of the Fed. They're just throwing money at this thing like there's nobody's tomorrow. And so having known that, it's just easy just to buy. And let me just go pull this up, just show you some of the trades we've just been putting on. And I'll talk my methodology here in a second. Let me move this down. Okay, so we have, give me 1 sec here. All right, so this is one of our stocks that we just bought. My ideal trade is that we get a bottom of momentum here. At the same time, we have stochastics starting to come back up. And then when we can come back into this channel like this, we have a reasonable shot at getting at least back to the moving average, which would be a great trade for us since we're in at 193. Or to get to the top of the channel, which is up to 235, 240 area, which would be a fantastic trade. And we've had a number of these trades that have worked out really well for us. And this one looks like it's setting up beautifully. We actually put a buy limit in here, anticipating this move to the channel, because this is a channel dancer. See, we've rode this trade up before a couple times, and now I think we're going to get another move here too. This is a gold miner, actually a gold extractor out of South Africa. And I think this one's going to keep moving. And just, it's just one of many. I mean, this is a trade we had today that was just it handed itself to us, is that this thing was scraping on the bottom of the channel and it drifted down, and I got a buy signal on it from one of my filters, and we bought. And I don't know if we just scared the heck out of whoever was wanting to sell or short this thing, but it shot up right through our top of our channel, which is where our sell limit was. and we made 12% in 20 minutes. It doesn't usually work that way, but we're happy for that trade. And then here's another trade we just did too. And I'm not bragging. It's more, I just wanted to just show you that these trades have set themselves up constantly. We bought this channel trade here and blew to the top of the channel, and we took that profit. And it just goes on and on and on. And so that's what we're looking for. And we're seeing a lot of these set up in the miners. And right now what the miners are doing, they've already had this low hit. So now what we have to do until this channel starts gliding higher is that when we get these hits of the moving average now, and we get this buy order in on our filter, we're taking those trades and moving up. And so where we see the future here right now is gold miners, silver miners, palladium, platinum, uranium, and this UUU one is also cobalt in it too. And so we just see a lot of these 10, 20% opportunities just keep presenting themselves to us. And we're just going to keep taking them until they take this trade away, and then we'll look for something else. So I just want to kind of show you that. I don't see this changing anytime soon. The Fed not only blinked, the Fed's in total freak out mode right now, and they're just not gonna turn off the liquidity jets. And Trump's gonna double down, I believe, sometime this fall or late summer. He's put a massive infrastructure bill over to Congress, and he has the Democrats trapped because they have to take it. And then Trump's going to be able to spend all this money in 2020 going into the election, showing people all the things he's done for them. And what are the Democrats going to say? They say that they can't say, well, we don't want this, because they're going to cut their own throats. So that's why it seems going to happen. They're just going to spend this thing through. And Europe already has given up. Japan's never stopped giving up. China is printing yuan like there's nobody tomorrow, but they're sitting inside of a pressure cooker, and they're going to start exploding out deflation here pretty soon. And when they do that, our Fed's going to have to lower interest rates, and they're going to have to print even more to keep our dollar from exploding against the yuan and keep our exports moderately competitive, and to keep us from going into deeper deflation. So I think we're sitting in a catbird seat, and that's kind of our approach. I don't want to make it any more complicated than that. We've been averaging on our trades now, 6% on these trades. And let me move this out of the way here. Here's the track record. And just to show you, last year at this time, the difference between last year and this year is that the gains are double of what they were per trade. We've been averaging 3% per week per trade, and now we're almost at 6.5%. And our methodology didn't really change too much, but what happened is the Fed has released the straitjacket they put on the market, and has created it to be more volatile market in sense of range, and it's basically doubled our trading profits. And so we don't see that changing anytime soon either. So I just wanted to kind of share that going into our conversation, and then I'm just going to look to see what kind of questions people have. Yeah, Chris, we're going to do crypto. Yeah, my voice, Phil says it sounds like I'm having a stroke. We're going to do crypto. Let's see here. So you guys have any questions for me before we flip over and talk the other side of the market? Any charts you want to see or anything you want to go over? Yeah, the Fed's going to be dropping interest rates like a dog going into the end of next year. Hard to say, because the dollar is really a basket against other currencies. And you saw today, the moment the dollar started to fall with the Fed going dovish, the Japanese came in there and they sold yen like it's going out of style to bring the dollar back higher. So, yeah, Boris, that's the question of questions. I think I don't know if you were on when we first started, but I think it's probably written now that we'll probably short term. I think we're gonna fill that gap 2,900 for Phil. Then I think we'll probably sell some going into earnings season, and then we're gonna have to see if they double top it. If not, they're gonna go straight to a double top. We're too close, don't you think, Phil? We're too close for them to leave it hanging 1 or 2% below an all-time high, or maybe that's going to be the big tease.
No, I think that's definitely trying to bring up the chart here so we can take a look at the gaps and stuff. But yeah, no, I think that basically what we're looking at would be so SPX has a gap at 28.80. Actually, also has a gap at 29.21.
Excuse me.
And our all-time high on SPX is going to be up here at 29.40. So if 28.80 fills, and that's that gap is not a huge one, but if that fills and then it keeps going, then I think we're probably going to retest all-time highs, double top there, and then fall off. That's how I see that playing out.
Yeah, and you've been pretty right on this. It's just pretty amazing, And I've been drawing. These are on the 4 hours areas where the sell signal should come in, and this sell signal just got obliterated yesterday. I mean, today going in, my 4-hour chart looks different than the daily, and it just got obliterated. And so now you have to say, okay, it's going to go higher. So.
Right, and then the interesting thing about this though is that it's actually pretty bearish, the fact that the Fed had to capitulate like that, right? So yeah, you're gonna have that easy money policy, but at the same time, how long is that going to over or circumvent the laws of physics when it comes to like the internals right now? Because the internals we're losing steam under the hood, more so than we've seen in the last 10 years, I think. So FedEx was pretty disappointing, right? And they're a pretty good barometer of the global business climate. So I don't know. To me, it seems like we'll get an initial reaction up, but if you're thinking this is just going to run to like, beyond 3,000, I think that's going to be tough at this point.
Yeah, I agree. And I think the problem people have is they draw this one-to-one conclusion that the Fed has gone soft, so therefore there's money going to be moving into the stock market. That's not always the case, because when you have a situation where they're not lowering interest rates right now, and companies, 25% of the S&P can't afford the interest charges right now, so that's a problem for them, and so they can't grow their businesses, and at the same time, if oil goes up and commodity prices go up and labor is going up, it's going to make their businesses less profitable. And you're just going to get this knee-jerk reaction down. Because remember, look who's buying the market, right? They keep telling you it's retail buying, but retail's been selling this whole year. And who's been buying has been buybacks and central banks. And probably the banks that have money on assets on loan at the Fed. Those are the people that are in the markets, and so they can only carry it so far. And I think they've been trying to push retail back into the market, but they're I don't think they're unwilling to do it. I personally think they're unable to do it. I just don't think there's that much spare cash out there to transfer from the big money to the small money. So I think, to answer your question, Boris, I think they're going to have a hard time. They may ring the bell, double top this thing. I know one time last year, there's a guy that both Phil and I know. He's a hedge fund manager, and also there's a guy named David Kudlow, of all names, who manages a huge portfolio out of Michigan. He and I talk a lot, and he's thinking that they'll probably try to push this to new highs, and so I have to respect his view on that because he's managing a lot of money. But beyond that, I think nobody has a crystal ball, and the Fed will have to start actually lowering rates. But every time the Fed's lowered rate, I put this in the chat room before I came on. Every time the Fed has started to lower rates, the stock market falls. So it gets to a point where people start thinking, hey, this is good, to, oh my gosh, this is bad. And so I think that's why I agree with Phil in that I think we're getting to the edge here. But when they do that, money has to move somewhere, and money's going to move back into the bond market, and money likes to stay in the monetary metals. So I think the trade's going to be probably long bonds, long miners, and short the market. And I think that trade's going to be profitable into 2020. And the guys, the question on the banks. Hey, look at XLF did not participate today. That's what threw me off trying to go short. Is that this is the banks today. This isn't bullish. If everybody thought this was bullish, these banks would be rocking. The banks have lost their ability to make profit. All their customers are broke. All their customers are tapped out. All their fee-generating businesses are drying up, and they've put everything they can into the markets already, and they have no spread anymore. They can't what's it called, borrow short, lend long. Now they borrow short, you lend long, you're inverted. They lose money. So this is a problem for them. So I think this is why I don't think this is long in the tooth. I think this is going to capitulate, and it's going to bring the market down with it. Real estate the same way. Real estate seems to love this, and for reasons I don't know. Maybe it's just, excuse me. Maybe people are just using math here, thinking, oh, okay, interest rates are down. I could squeeze this some more. But you got customers that's closing shops. I live in a fairly affluent area, and they're closing retail stores left and right. And commercial real estate's too expensive for people, and you're going to start seeing that stuff rolling over. That's what I'd watch for. I think financials go, real estate investment trusts start to go. This market is toast. Boris, the smart money, you're actually doing pretty fine. Smart money is getting into gold and silver, and getting into the metals that can't be easily obtained. Uranium, cobalt, platinum, palladium, silver, all those are in deficit, and Russia has figured it out, and they're starting to hold this stuff off the market. And so it's not going to matter. People are going to want it, and they're going to need it physically. Even if we go into a deep recession, the amount of metals that are required from some long-term purchases by sovereign nations are going to drive the prices higher. And I'd rather be in those things. Look what happened today with USEG. It didn't take much to get people freaked out and buy long. Same with UU. And we've traded URA and CCJ. Those are all uranium stocks. So I'd be looking to buy any of those on dips. And I'd be looking to buy any silver miners on dips, especially the smaller ones. And if you like to trade options, I'd buy the bigger ones and sell calls against them every week, like we do with GOLD. And you probably could do it with Newmont too. They have little overhangs right now because of they don't know if they're going to be buying companies and all this good stuff. But all those major miners are going to go up 3 to 4x. All the smaller miners are going to go up 8 to 10x. It's just inevitable. And we've seen this before. I've seen this now 3 times in 20 years, and this is now number 4. And so the Fed has a playbook that's pretty obvious, and now they're going to push on the string, and the money's going to leak out over there. That's where the smart money's going, in my view. Let's see anything to say about Basel III coming up. Jeff, to be honest with you, I haven't even been paying attention to the Basel III thing. I understand what it is. I didn't know it was coming that fast, but that can't be anything but bullish for gold. And I think Jamie Dimon's been buying silver in anticipation for that for a long time. Again, once again, Chase is the smartest bank on the block, and those guys have gotten themselves locked into some pretty low cost collateral. And can you imagine their 54 million ounces that they have, or whatever they own, and that thing starts going up 4 to 5x, gives them a lot of leverage, and they could cause a squeeze at any time they want now that they're net owners of those shares. That's why if you look at what's happening in palladium, Russia now is gotten smart and said we're not going to export it anymore. The banks in London are getting barbecued. And that's why PLG trade worked. If you guys want something to hold long-term, SPPP is going to work because they can't get the metal and they need it for industry regardless of the economy. GDXJ are okay. They have a lot of junk stocks in there. That's why I'll trade them quickly, but I rather trade directly. There's a basket of 7 or 8 miners that, as you see, that I trade all the time, and I rather trade those because you can get quick. Look at, we're in Harmony right now. HMY. This is another one I just was talking about when I talked earlier. We bought this thing at 195, and right now it's pushing 207. We have a target we had originally 210. I moved it to 214. And, this trade already now is, up nearly 5% in a week. I could do that all day long, where GDX moves 1%, maybe 2%, at a time, where I'd rather take these and hop off and find the next one. And that's why I jumped into KGC too, because I think it's ready to make its next move as well. So, yeah, anything else here? I know I monologued there a little bit, but I want to make sure I'm answering your questions. And Phil, we can roll over to cryptos here unless somebody else has anything else for me, which is equally exciting. A lot of money being made there now too. All right, brother. I'll give you back the forum. Oh, on pot stocks. Well, do that. I only follow MJ. I think they're extremely overvalued. So they're really Momo names. That I'm not really good. Well, I should say I'm not really good at day trading. I could be great at it if I wanted to be. It's just that I'm watching stocks, and we have a huge subscriber base, so I can't sit and babysit those. But I think at some point people are going to realize that a company with $7 million in revenue is not worth $7 billion, and I think that they'll be abandoned very quickly. So that's all I really can tell you about marijuana. And pretty soon you're going to get Altria in the business, and once Altria gets in the business, every pot stock in the next 10 years will be out of business. So, yeah, I don't think they're going to take it over. They don't need to. There's nothing compelling about a marijuana greenhouse. I have a friend who's a commercial broker, and he's also what's called a business startup advisor. He's been helping people buy and build and start and get certified and get legally approved to provide marijuana to dispensaries. And it's dirt cheap to get into the business. So all those guys really have is marketing. I doubt any of the big pharma companies are going to spend money that's 10x, multiples, or 100x, or sometimes 1,000x multiples for something they could just go in there and they could just go ahead and get a 100-acre greenhouse and put every one of these guys out of business in 6 months. So I don't think they're going to buy them. They have no intellectual property that anybody wants. There's no moat to their business. And I've done M&A work. I looked at the numbers and I just gasped. There's nothing that the big pharma wants that they can't get. And somebody write $100 million check and they could build out their own business in 6 months. So they're not going to spend $7 billion to buy, Canopy or Tilray when they could just get in the business at 5% of the cost. So anyway, Phil, go ahead. I'll flight over. Hope that helps.
Okay. All right, guys. Let's switch over to the crypto charts, um, and we'll take a look at we'll take a look first at Bitcoin. Okay. So basically, this we're gonna start with the hourly chart. Hey, Bob, can you turn on your volume just a little bit?
Turn on my volume or off my volume?
Yeah, there's a feedback when I'm talking.
Oh, interesting. Hold on a second. Let me put you on mute. Can you still hear me?
Okay. So basically, on the hourly chart, guys, what we've seen is we came up, we made this one high. This is back on the 16th, so 5 days ago, made a high. We pulled back, got touched into this fib range. Bob, yeah, I can still hear it.
Turn on my volume or off my volume? Yeah, there's a feedback when I'm talking.
Anyway,
hold on a second.
so what we've done is we've basically gone and tested these zones here where the fib level is. So we're still looking for from this area. Once we break above, we're going to tag this fib level at 4080. What's happened here is that we ran up against this trend line, and I'll show you guys that on the daily chart. Came up one high back on the 16th, so 5 days ago, made a high, pulled back, got touched into this fib range. So this is the trend line that we've hit, and basically, that I think was a big part of why we saw this pullback. But as we've been seeing from this bottom back in December, we've been seeing like every time they've been trying to like dump the market down, we've been seeing all of those little BART moves get absorbed, which hasn't been the case in the past. So normally in the past, what would happen is we'd see like instead of these BART moves getting bought, like we have here, and this was a spike here, and we have another one here. Normally these would have retraced a lot lower, and then we would have consolidated sideways and then probably had an opposite move up. Whereas now, like all of those big orders are getting absorbed. So there's buyers, the equilibrium has shifted over to the buyers. So as you can see, like this one came up. 4,200 was a big level, and that's why this sold off, because I don't think there was a lot of buying pressure on this initial attempt on 4,200. The real buying supply or the real buying pressure was down here lower on this pullback area. And then once that held and we made another higher high, that's when I think the technicals changed for the interim as far as this move up from the bottom. Now, as we talked about with the Fed, I think that policy announcement, I think, is actually going to bode very well for things like Bitcoin and gold. So, for me, I looked at that and I thought, well, the case for the bottom being in Bitcoin has probably gotten a lot stronger due to that. And, bottoms in Bitcoin, they kind of come and they're put in, and everyone's not expecting them to be in until they look back 6 months later and are like, yeah, the bottom's in. When everyone's, a lot of the sentiments like, well, we'll capitulate, and there'll be a big spike, blowout, go down to 1,800 in one fell swoop, and that's going to put in the bottom. But for big macro bottoms, that's not usually how Bitcoin does it. You'll see that off of after big run-ups. You'll see big capitulation type moves, and those can be bought for several weeks at a time. You can buy those. Those lows usually stay. But when we're talking about big multi-month, post bear cycle type stuff, this is how those bottoms will be put in. They'll be put in kind of without much fanfare, and everyone's expecting that we retest lower. I do think that we do retest lower. Don't get me wrong, but if we can break this trend line that Bitcoin's pressing up against, that's going to open up a big volume void above. And what I mean by that is you can see here. Let me hide some of these indicators. Hide that one there just to clean this up just a little bit. So check this out. If we go to the weekly chart, what I'm looking at is this volume void that we have here. So basically we've got this big void, and this is where basically the previous floor held, right? And then it fell right through. And once that 6K started to crack, that was the concern, was that we just didn't have a lot of volume in this area. So you got support at like 6,400 and you got support at like 3,800, right? And then there's just a ton of air in between. So breaking above the trend line, this trend line here, it was going to be a big deal. And I think that will, if we do that and we get a strong close and we got to see the appropriate amount of volume on that, then I think we do see a move up and probably into that 5K range. But again, it'd have to be a pretty strong volume to get us past that point that we're rubbing up against now. So basically, they're buying the dips, and this trend line is key in whether or not we move up into that volume void for me. So does that make sense? You guys have any questions?
Breaking above the trend line, this trend line here, it's going to be a big deal. And I think that will, if we do that, we get a strong close, and we got to see the appropriate amount of volume on that, then I think we do see a move up and probably into that 5K range. But again, it has to be a pretty strong volume to get us past that point that we're rubbing up against now. So basically, they're buying the dips, and this trend line is key.
If you don't break the trend line, okay. So basically, what we'd look for at that point is we're gonna take the basically the move that we have high to low, okay. So the entirety of from the low to our current top. So that would be the first thing we do if we start seeing this thing just not making it. So that would give us a fib retracement. That would be the first thing I look at. And so that's going to take us back down to 3,600. And, you know, we got a, I know it's a little hard to see, but we got a decent amount of volume node there. So that would be like the first, you'd probably see what would happen is they're going to take out these lows here. So the low at 36.55 and the low, there's also a low at 36.72. I think you would see a quick spike so I would wait for that bar to come down, raid those lows, and then close back above it. And then I think you're going to have a decent opportunity to get long for another leg, a leg higher. But what you really want to see though is this current move. See, we've already kind of pulled back to the 50% fib, right? So in reality, you don't really want to see that at this point. What you want to see is this thing break out of that, and then ultimately what that does is that brings us to the 20, basically up to about the 4,500 mark on that. Okay. If this thing let's just say this doesn't break through, doesn't make a new high, doesn't attack these fib extension targets, and it rolls over here, and let's say we close below those lows, I would be looking at this trend line. But if not, then what's going to happen is you have to look at what are our fib targets down below, and that first and foremost, we're probably going to see 28.90 in that area, give or take, if that was the case. But a lot of times on these moves here, when we come back down, these are pretty powerful lows. So don't be surprised. I would say probably more likely is that you retest these lows and you kind of put in like a double bottom or close to it. That happened pretty similarly in 2015. Everybody thinks that things are off to the races, but that's entirely plausible. But right now with the volume that we're seeing, we're seeing an uptick in volume on the daily. And again, there's the price action. We're buying, the dips are getting bought right now. So because you can see they're trying to BART it down like they have been. And we used to have like these nice, perfectly BART dumps and then a retrace up. But you're not seeing that. That first BART move down gets bought and then goes back up. So that's a bit of a change of character, which shows me that the equilibrium has changed to the buy side for the time being. We're currently, again, guys, we're long in the room. Stop is, to entry, so risk off and looking for that 4,200 target area. And again, on the hourly, you can see where we, moved down. This is a different fib range, right? This is targeting this range here to the top here with a current fib target of 40.81 on that move. But you can see where, again, another dump down, just getting bought right back up. So definitely buying the dips here. And I think, again, they're going to test. I think we're going to test and probe up toward 4,200. And then I think everybody's going to kind of see what happens. And that's going to be a test of, I think the dip buyers are probably going to step aside up there. And it's probably going to take a couple of tries would be my guess. And then what you might end up having is a short squeeze above that kind of flips everybody long, looking now at like those levels we talked about going up into 5,200. Yeah, 4,200 would be the immediate, that's our target, 4,200 right now. And then I think you kind of have to step aside. You could short that level too, but I think that's going to be real interesting to see how the market reacts once we get up there. If 4,200 rejects, let's take a look. So we would be pulling, let's actually extend this. If 4,200 rejects, I would say that, and again, we have to, there's a lot of support in here, right? But if we do get down to these levels, then, what's going to happen is this 20, these targets down in the 2,000s are going to start lighting up. So based on this move here, I would, low end of the target would be like around 2320. But there's a lot of support that has to be broken here. So it's not like that's going to happen in the next couple of weeks. I just don't see that. The market structure has changed, right? And volumes actually increasing the last few days. So BTC will be around. It's that the cat is out of the bag, right? The genie's out of the bottle. So once you have the institutional guys aligning themselves with it, that's you're basically saying it's not all the skepticism about it. Can it be hacked? Blah blah blah, all that stuff. It's kind of out the window now. It's about it's right up there with the internet. It's the internet of money. So now it's about what's going to be the trajectory on the growth rate. Again, you got to look at it like a store of value, and they're layering. They're going to be able to layer a lot of applications upon it. So, store of value first and foremost, and then if that's the case, you're looking at a digital version of gold essentially, but much more scarce. Much more scarce. It took us 27 days to go from 8K to 20K basically, and that was largely on retail volume. So what happens is when you get into a real secular bull cycle with Bitcoin, there's just the supply becomes the issue, right? So there's just no supply. We used to have sell walls. If you went way back, right, way back in the days of early exchanges, you'd have sell walls that were like thousands of Bitcoin deep, okay? Now if you see sell walls, they're hundreds of Bitcoin deep. And then what happens is time goes on and there's going to be sell walls that are tens of Bitcoin deep, right? Finally, you get to the point where they've been accumulated and price is pretty high. You're going to see sell walls of just single digit Bitcoins because they're that finite and they're that expensive. So that's it's a unique asset. We haven't really seen anything like it, but that's going to be the way that this plays out. And so that's why those valuations seem incredible, but mathematically it's pretty viable. Yeah, I think, guys, typically, the halving's coming up Let me see if I can bring that up. But when the halving comes up, right? That's been a big driver. And people say, well, we don't have enough data points. There's only been 2 halvings. But when you're taking you're decreasing the inflation every time by half of what. So miners mine, they get rewarded. They get right now 12.5 Bitcoins. That's going to go down to 6.25 Bitcoin next year. When you're taking half the supply off the market, right? Because these guys are rotating supply. They get rewarded. They dump it on the market, pay for their mining costs, blah blah blah, take their profit, move on. You're cutting that supply now in half. That's a huge driver in price. Okay, that's the one thing that drives price consistently with Bitcoin. And these are the areas, and you can see it with Litecoin. Litecoin's run up, their halving's coming up in August, and it did a pre-halving run up. So you're going to see the same thing with Bitcoin. You'll probably see a pre-halving run up, cools off, and then probably gets going again. So now these are the times, even though it seems like, it's kind of precarious because Bitcoin's been down so much, is the bottom and blah, blah, blah. But it really, if you're looking to get long-term position, these are the areas that we start looking at. So I'm not sure what noise you're talking about. All right, you guys got any questions? Ice data feeds. Very surprised to see so many listed. I don't know what are you talking about? So many of what? So the institutions are late to the party on Bitcoin. Oh, you got to understand, over half of the Bitcoins were already mined by the time they really started paying attention. Okay, Bitcoin was dismissed during the time when they could have come in and accumulated a whole bunch, but they didn't. So they're kind of playing catch up. And people ask, well, does the futures, is that going to affect things? But I think in this case, unlike the gold and silver markets, which I think are heavily manipulated, and I think that does come to an end too, with, ironically, probably the help of blockchain and creating more of an open ledger on the supplies there. But Bitcoin's got an open ledger, right? So that's the big difference, is that you can see how much is where. Okay, so these guys can't really go nuts. If they go nuts with paper contracts, and these paper futures, right? They're not settled in actual Bitcoin, right? So they're strictly like a hedging instrument. And a legitimate case for that would be if you're something like, let's say, Circle Pay or something like that, or Square, or one of these applications that are going to give you the ability to buy Bitcoin. So they've got to have Bitcoin in inventory. So what they'll do is they'll buy it and they'll hedge it with a futures position. In case it drops, then they're hedged on their position, because they really don't want to lose money on buying Bitcoin that they're now having to sell to you at market. So there's legitimate reasons to have the Bitcoin futures for hedging, but with the open ledger, you're not, it's gonna be real hard to argue that the supply issue, because of everyone knows how much is really out there, right? It's mathematical, it's finite. So I don't think it's going to be a subject to the manipulations that you see in other markets because of that. The futures, I think, ultimately are going to be a positive thing, but it's not going to be a issue of where they wag the dog. So so you're okay. So you're talking on the ICE data feed. You're talking about just the amount of different tokens. That's going to be standard, right? I mean, like, Binance is basically, they've got, I don't know how many, they got hundreds of tokens, right? And what'll happen is, those that don't have the volume will probably not be worth the exchange's time and will get delisted. And I think that's how a lot of these altcoins are probably going to end up ultimately dying off. This is the Brave New Coin Liquid Index for Bitcoin. So this is basically the historical way of looking at like the longest look back for Bitcoin. And basically, you know, these are the halving events on these vertical blue lines. So as you can see, before the event, you usually get a bottom and a run up. This is the last one, bottom and a run up. But you also get your highest growth rates are after the halving events, and it's strictly it's a deflationary event, right? I think this halving event takes Bitcoin's inflation rate down to, I think, 1.6% or something like that, but it's lower than gold and stuff like that. So I think that's where the potential for a move, like these are just forecasted bars, but you know, you can see on this log chart where you could probably see something like, you know, you start venturing into the six figures out into 2021, 2022. Raven coin, we can take a look at that. Let's get off a monthly chart, huh? Let's go look at a daily. This is not the right chart. So Raven, you know, great move, extremely overbought. You know, these are the type of moves we saw in the real good, strong bull market on a lot of altcoins. But you know, you're going to be subject to this kind of pullback stuff. So there's not a lot of price history here. If we were to actually load this, I'm going to load this on a different template. Hang on. Sorry, it's laggy. Okay, so basically what we have here is it's way overbought outside of the linear regression channel. So what you want to see is this thing pull back to the bottom half of the linear regression channel, and at that point would be a better spot to buy it. If we're just looking at it here, you know, Stoke is strong, but we are basically looking at a bearish divergence here on the RSI. So, and these cells here are more aggressive cells, kind of like when you see those fire. It's more like you can take action within the bar kind of a thing. But when I see them firing with a bearish divergence like we have on RSI, I take a little more credence to that. So what I would look for, the other thing I'd look for is the fib retracement. So, you know, if we get a move, so you got nice volume nodes in here. So if we got to move back, and then you also have some support and resistance here. So this 808 area, maybe a little above that, pull back there, that would get you a nice retracement back into the the linear regression channel, and then you're going to have this upside target of 1330. Now that's all contingent on Bitcoin though, right? Because if Bitcoin pulls back, doesn't break that trend line, don't think these are just going to continue on without it. That's probably a highly unlikely scenario. So this would be contingent on Bitcoin continuing to make higher lows, higher highs. So, but I would not buy it here. I think that would be a situation like this where you're buying it here, and then you're going to be spending weeks underwater hoping that it comes back and that wasn't a top. Because these are big percentage moves that you've gotten. You know, this broke out of this consolidation at 278. So, you know, this is a huge move. This is 5-6x that we're looking at here. So, but don't buy it here. Most likely we're going to see some sort of pullback. That would be your safer bet. buying spikes on altcoins is never, usually the return on that's just not good. All right, guys, I actually have to run. I got an appointment. So if there's anything else, I got to take off. And Bob, you got anything to add? Yeah, Dan says it's that's true. Fight the urge. Okay, guys. Well, that's gonna be it then. Appreciate you guys watching. You got any questions? Leave them in chat. We'll answer them. Otherwise, we'll see you guys in the room. If you're not in the room, check out our room package, tradelikeagenius.com. All right, guys. Take care. Thanks for watching. See you later.